Welcome to Inside Scoop with Sean Emery, where we will continuously bring you closer to companies, sectors, and themes. This recording should not be construed in any manner whatsoever as a substitute for personalized individual advice from Avory and Company. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies mentioned. Investments involve risk and, unless otherwise stated, are not guaranteed. So we got quite a bit of information yesterday from the Square team, as it was supposed to be their investor day. However, given the global circumstances, we received more of a near-term update in regards to the dynamics currently taking place at the moment, but also data on the long-term trajectory and economics of the two core businesses which Square offers. Today, I'm also bringing on a colleague and friend, Max Friedrich from Ark Invest. We both cover Square in great detail in our own right. However, we do communicate regularly behind the scenes and bringing that to the forefront. And both of us hold Square in high regards in terms of what they are doing as a business and just how they execute overall. Now, just to level set the conversation for everyone, Square has two core businesses. Their seller business, which offers the service for merchants. So think coffee shops, arenas, festivals, restaurants, and others to sell products and services both online and offline. Roughly 125 billion of payment volume moves through that system annually and has been growing north of 20% overall. It's vertically integrated as they produce hardware and software. So think payroll, which we are users of their payroll solution, along with a critical access point for sellers to get loans through Square Capital, of which they have already originated over 2.3 billion in loans as of year end. So overall, that's the Square seller business. The second business is Cash App, which is directed towards individuals. Its core functionality is really peer-to-peer payments, but has gone now through a large evolution and has become a true digital wallet for what we believe to be over 30 million monthly active users at the moment. They launched Bitcoin trading and stock trading recently within the app and offer rewards for spending at certain merchants. This business is doing remarkably well. And as of the end of February, given the update yesterday, this business was growing its gross profit by 118% year over year. So again, executing wonderfully. Now that I have set the stage for the two businesses, I want to share with you the conversation with Max. We go over the near-term data points we just received, but also step back and articulate our thoughts around Cash App, the competitive landscape, and also the thoughts on the seller business overall. Before that, and just to be clear, this conversation is not a recommendation to purchase or sell Square or any other company in which we mention, and both Avory and Company and Ark Invest are investors in Square. So with that, let's just get to the conversation. All right, Max, how you doing?
Hey, good to be here. Thank you.
Yeah, nice to have you on here. I hope everybody on your side is healthy and kind of working through the situation. Obviously, we both communicate offline quite a bit to share some of kind of our insights, our data. We have a shared mission, just given our interest in the company. So I thought it would be interesting to have us both on the podcast today and share our own internal conversations. I'll open up and give a high-level financial update from what we received yesterday, and then we can go back and forth. How's that sound?
Sounds good.
Cool. So like as expected, yesterday Square's business was doing very well. Well, heading into the second week of March, Amrita, the CFO, stated that they were about 2% above plan in terms of gross profit growth and on pace to exceed guidance for this quarter end. Overall, the two businesses were growing robustly. Overall, the combined was growing at roughly 51% year over year, with Cash App growing 118% and Seller growing 32%. And obviously the world and specifically the US, where Square is predominantly present in, has changed in the last 2 weeks, putting pressure on their seller business as restaurants and other brick and mortar sellers are really forced to shut down. Sellers seeing all types of daily fluctuations. They mentioned 30% one way or the other. And GPV over the last 10 days on an average basis is down 25%. On the flip side, Cash App, as mentioned by management, is acting as a form of stability here, and seeing nice traction and also, again, some stability. They did lower their guidance overall by about 2%, which again shows how strong the business was heading into the situation. And then they also gave us some insights in terms of liquidity, which is the issue in this environment for every business in the world today. And given that this is a well-run business, they have about $3 billion of cash. They just did a convertible note offering 2 weeks ago. This was before really the situation started to take fold in the US. And they mentioned that they have about 2 years worth of liquidity, assuming conditions last for that long. So that was some of the high level financial data we received yesterday. But I guess secondarily to that, Max, wanted to ask you, we did get a deck yesterday, shows a ton of information, a ton of valuable kind of facts and details. And I wanted to digest everything in its entirety for the moment and listen to some of your takeaways from what you heard or saw. So if you could just share maybe 2, 3, 4 of some of your key takeaways, and I'll share some of mine.
Yeah, for sure. First of all, I have to say, to digest everything for me will be a little bit too much, because I think there's so much that they disclose, and there's so much to kind of dive into and unpack. And that's what I'm going to do kind of today and tomorrow, and then kind of like look how that affects our modeling and so forth. But I think that a couple of things stood out to me. On the seller side, I think it was good and just reassuring to see that the loan loss rate is going down from what it looks like, around 4% in 2016 to around 3% as of today. And that's just and from what I understand, correct me if I'm wrong, if I have those numbers right, but for banks, those loan loss ratios can be rather 5, 6, 7, 8% even range. So as a comparison, that's good to see. And then that decline, I think, is just a testament to their algorithms, to their abilities around machine learning, which they have been pushing over the years, and just shows you how important it is to control this alternative data, that how Square is doing it, right? So they're seeing all kinds of cash flow from merchants, and all kinds of data points when seasonality, when businesses would need some cash, and they can proactively go to the merchant and so forth. So I think that's kind of a great proof that that model works, and shows you how important alternative data is in lending, and what kind of unique advantage you can get by doing that. And you can also see it kind of in a market that you have other players like Stripe and so forth now also giving out loans. So that was interesting. I think on the Cash App side, there also is a lot to unpack. Just one interesting thing, that the ROI curves across cohorts, I think that's on page 40, are, you can see that the payback periods are getting shorter. So the curves are kind of going to the up and to the left. So the month payback period is getting shorter, which conceptually makes sense as they're rolling out more products on the Cash App. You see more monetization, so it makes sense. But it's just, again, kind of great to see that it's working. And then another great chart, one of the last charts they put out, I think, was the comparison in revenue per cohort before and after Cash Card adoption, and revenue kind of doubled, I think, even after 6 months adopting Cash Card. And that's, I think it shows you that how powerful Cash Card is, but that it's not just some prepaid, debit card that bunch of other fintechs and challenger banks, and we might talk about them later, have, but that there is a unique product attached to the Cash Card, which is Boost, which I think I would guess is responsible in a larger part for that doubling in revenue, just because it makes the Cash Card so much stickier. From what I understand, they are also already doing or working on personal kind of personalization of Cash Card and the Boost function. So it may get even stickier for individuals. Yeah, so that's kind of three takeaways from my side. But yeah, there's so much to unpack here.
Yeah, no, I agree. I think I guess echoing some of the Cash App uh, data points we got was just comparing the seller business to the Cash App business in terms of ROI. And they basically gave us the data points that the payback period in terms of generating 5x on their return within Cash App is about 2.5 years, and the seller ecosystem is roughly 5. So you have a business that's growing 118% with a payback of 2.5 years for 5x return relative to the seller business, which is again the slower business. So it's a interesting dynamic taking place where that is occurring. So I thought that was extremely insightful, combined with what you were saying about the cohorts. Second, for me, was we're an environment that is obviously fluid and extremely dynamic. And CEO Jack Dorsey stated yesterday, and again going back to Cash App, is that they saw record first-time users last week. So again, they are having the ability, despite the environment, to attract different types of users, likely for different use cases. We're tracking, and I know you're tracking, Twitter feeds of Cash App and other types of channels they're on. I think we're 6 days in on them handing out dollars through Cash App, basically in terms of their. They usually do it on Fridays, and they've done it for about 6 days in a row, and that is likely attracting a ton of new users and bringing them into the ecosystem, of which, like you were saying, hopefully will become Cash Card users, which then become much more monetizable users over longer periods. And then the last one, which I don't know how much we can take away from it in a silo, but Jack yesterday, as they were talking out loud, was the comment around, and I don't know how many people caught it, but said that the current situation may create a totally new ecosystem by itself. I don't know exactly what he was referring to, but we know that he has created 2 ecosystems by itself from scratch. And then also there is the Square Crypto ecosystem that he's trying to kind of launch and get off the ground. But it's just interesting to hear that it's situations like this where your sellers, your merchants all become pretty innovative in the time of necessity, and that they are thinking with that type of mindset of, if there is a need out there, potentially we could create a solution, and it may be very well different from what we already have. So bigger picture, it's that type of mindset that I think as investors, we all appreciate as it relates to Square as a whole. For segments, I kind of wanted to spin off at least the 3 facts or 3 takeaways each, was digging into the different segments. So let's start with Cash App. I think for a long time, this part of the business was mostly underappreciated by many. I think Cash App ultimately has 3 things that play in its favor. And 2 of those are market driven. And then one of those is specifically Square driven. So laying those 3 factors that play in their favor. One is a massive market. Yesterday, within their deck, they assigned about a $60 billion market size for this category, and they classified it as sending, so peer-to-peer spending, where you're talking about spending at merchants or even through Boost, and then investing with their new product for Bitcoin and stock trading. Second is the optionality as they become more of a central part of consumers' financial ecosystem, so being a central wallet to consumers. And then third is just the creativity and execution, which is arguably, in our opinion, the hardest thing to do, which allows them to obviously take advantage of the large market and the optionality that it does have. Now, you have done a ton of work on Cash App, and we've shared some of that data back and forth, but just walk us through maybe what makes Cash App so unique as just a product and how you're thinking about the opportunity there.
Sure. So I think it's a good way to start thinking about the opportunity and kind of the uniqueness of Cash App from that market opportunity perspective. I think yesterday they said, it's a 60 billion market size with sending, spending, and investing. And if you think about that market, two things come up. It's a big opportunity, and there will be a lot of players going for that opportunity. And secondly, there are also a lot of consumers up for grabs to acquire, right, by Cash App or other players going for the opportunity. So for me, two important points are the customer acquisition. Am I the company that is acquiring these customers? And then the second point is customer retention. Am I the company who's able to keep those customers engaged and not churn off to the next kind of fintech app that launches? And I think that Cash App has very unique qualities to address those 2 points. And this quality for that Cash App has are network effects, peer-to-peer network effects. The Cash App at its core is a P2P payments network. That's how they started in 2013. And that's how the majority of the user acquisition is still happening today. So what does that mean, that P2P payments network? Well, basically, it means that the value each user receives from using the network, from using Cash App, increases as a function of the overall number of people using the app, right? So that means a customer is interested to actually sign up others, his friends, his family, classmates, and so on, to the app, to Cash App as well, so that he can send them money, but they can also send him money, right? They can split bills and so forth. And if you look at the adoption rate of such P2P payment networks like Cash App, also across age groups, they appear to see faster adoption even than social media did 10 years ago. That it's also social media is also benefiting from these network effects. But it looks like that peer-to-peer payment networks could be adopted even faster, which conceptually also makes sense because you might want your parents or grandparents on Venmo and Cash App to send you some allowance, but you maybe don't want them on Instagram stalking your stories from spring break or some other party, right? So that could be even more powerful. And these network effects, so these network effects are very powerful in customer acquisition, just because they kind of spread by themselves at some point and make the customer acquisition very cheap. So for example, Cash App's customer acquisition costs, we think are around $20. Banks spend around $1,000 up to $1,500 for new customers. So Cash App's marketing strategy with that is really fascinating. They target specific communities, specific user networks, for example, by doing ads on certain podcasts, on an AI podcast or on a sports podcast. They collaborate with rap artists who then kind of push the Cash App to their followers. They sponsor esports teams and so on. So what they're doing is they're inserting the Cash App into these communities or user networks, and then kind of let the network effects do their magic and let the app expand in those networks, between those peers in those networks, and get sticky. So that's the acquisition part. And what they can do after that is they can upsell those users to more and more products, right? There are a couple of products on Cash App. So when many users start with the P2P functionality, but then they might find out that they can invest in Bitcoin. Then they find out that they can invest in stocks, that there's this cash card that offers these interesting boost programs and so forth. So the users stay engaged by using all those products. You can even think about it as kind of a sunk cost. If you have money invested in Bitcoin or in the stock market, or if you have personalized boosts, those are reasons for you to keep using the app. And then obviously there's a social part where you don't want to leave the app when your whole friends are on it, because now if you're together at dinner and you can't pay them, it turns into kind of a uncomfortable social situation. And we've heard proof of those qualities of the users actually being more sticky also on the earnings calls. I think on the most recent one, they said that Bitcoin users generate double the revenue of non-Bitcoin users, or I think, yeah, something around those lines. So that's where the stickiness also comes into play. And I think those are really the qualities, acquiring the users cheaply, keeping them engaged, and then kind of keeping them from churning, which makes the Cash App so special. Because if you look at challenger banks or other even normal banks or other fintechs, they don't have these peer-to-peer networks because they don't have peer-to-peer payments, right? And I think that's super interesting. And then kind of the more broader outlook, if you do some math, if you kind of think about, okay, how much are investors valuing each Cash App user on a market cap basis? If you use Square's, kind of broad across the company price to sales multiple for it, which you can argue about if investors value the Cash App higher. But I think, like Sean said, I think many investors still don't really get this story. So let's just use Square's general price to sales multiple. If you use that, investors on a market cap basis are valuing each Cash App users at around $150. And that's pre-corona. So that's probably another number now. So $150. If you compare that, what VCs pay for challenger bank users, that's in the thousands, goes up to $2,000-$3,000. And if you look at what investors pay for a bank user in terms of market cap, that's around $3,500. So there's this big kind of discrepancy between the Cash App user, how he or she is valued, and really a fraction of a bank user. And obviously today there's a big difference between a bank user kind of at maturity at a Chase or a Wells Fargo, and a Cash App user that is, maybe primarily uses the P2P functionality and a little bit of cash card and a little bit of this and that. But conceptually, also as Cash App is maybe penetrating, as we're seeing, more financially fluent user bases, kind of moving out of the underbanked, underserved segment of the population, they really have the opportunity to capture more and more valuation per user, so to say, and generate more and more revenue off those users. And as we've seen with the kind of ROI charts that we saw yesterday, that's working out apparently. We could see kind of from the investor perspective, maybe a shift towards investory saying, okay, maybe Cash App is doing what they are set out to do, in their words, which is to build a global banking platform. And that could completely turn around the valuation of Cash App users, completely turn around the valuation of Cash App. And I think, that's a big opportunity of growing these cheaply acquired Cash App users into, from a valuation perspective, something that resembles more banks than just these peer-to-peer digital wallets today. Really, for us, the key term here is digital wallet. An application on your mobile phone, which you can use to do multiple consumer financial products, use multiple consumer financial products, similar to what we've seen with WeChat Pay and Alipay in China. Maybe not the same as there, but basically one application that offers these functionalities all in one place. And I think that's where Cash App is going, and I think that's very exciting, also from a valuation perspective for the company.
Yeah, no, that makes sense. I think from a kind of what you're saying is there will be an inflection point, assuming the company continues to execute and provide more and more services within the app. And there's something about the network effect here that is in my opinion just different, being that the network really starts with trust on the way in, because we're talking about financials. We're talking about someone placing their capital inside some sort of app. So there's trust on the way in. When you look at traditional social media and the network effects there, it's not necessarily trust on the way in. You're putting a username and password and kind of seeing what it's about. Here you're talking about storing some of your value, whatever that is relative to your net worth, and then transferring those assets. And again, as you move deeper and deeper into new product lines, that trust continues to build, which therefore likely becomes a stickier user. And again, those ROI curves, which 5x ROI in 2.5 years, as you build out that product portfolio, will only actually probably move in just depending on what they're spending. And then obviously the opportunity set is so massive given the population here in the US, but also beyond that as they move outside of kind of what you were referencing, the underbanked, which was the main mission and focus as they went on or into here. So staying on Cash App, I guess I have another question, which is what would, so we see what we have at face value today with the three spending, sending and investing. That's broad in nature, but what would you expect the next product within Cash App to be, or even just directionally, where's Cash App headed from a utility or however you want to frame it? We've talked in the past a little bit about it, but kind of lay down what you think maybe the next product could be.
Yeah, I think directionally it's what they've been saying. If you read the job postings, if you listen to Jack on the earnings calls, it's to build more and more consumer financial products and become really a banking platform. I think that's what they're after in the long term. I think short term, they look very good on the crypto product, or rather Bitcoin product execution right now. So I think what's already live for Android users and what should be the next product kind of rolled out across all users, also for the iOS users, is to purchase Bitcoin in the form of Satoshis. Satoshi is a unit of Bitcoin. It's the smallest unit of Bitcoin, equivalent to 100 millionth of a Bitcoin. So, and I think that's interesting from a psychological perspective, where, if the everyday Cash App user, if he buys, one Bitcoin, if he buys one Bitcoin today, that would be a lot of money. Rather, if he purchases, $10 worth of Bitcoin today, that's, I won't do the math, but like 0.002 or 0.001 a Bitcoin, which doesn't really sound that much and isn't really that maybe appealing for a lot of users who are not really into Bitcoin. They might think, oh, I have now this like fraction of something laying around here. What is it even worth? And with the Satoshis now, if you purchase, a small amount of Bitcoin, you are now, holding hundreds of thousands or maybe even millions of Satoshis. And I think that could be interesting for the kind of overall adoption of Bitcoin on Cash App. And then I think on Bitcoin, maybe we could see an auto buy function. Maybe we could see kind of Bitcoin being integrated into Boost, so to receive Bitcoin back if you use your cash card. And then maybe also short or rather medium term, what becomes relevant, I think, is the ILC conditional approval. So there So they received the additional approval for the ILC banking charter last week, and what that enables them to do is offer, not only lending products on the business side but also on the consumer side. So I think I'm pretty sure that you will later this year, maybe 2021. I think a credit card would be very interesting. Would not have gotten a credit card without Cash App. Maybe if they are pushing the direct deposit product more, you could see something in the overdraft category. Generally, I think they can do a lot more just because of the amount of data they generate of their users, and they can use all that data, to price risk and to offer, very interesting dynamic products, which they're already doing with Square Capital. But I think they have a lot of potential like I said, to kind of harvest that data that they're collecting cross products and use that for new products, especially on the lending side.
Yeah, no, I think I tend to agree. If you're thinking about the next product, I think starting with kind of personal finance is likely the first kind of phase. Credit card with the recent news with the bank charter, that makes the most sense. If you look at some of the other kind of financial products, and before this, I was just scanning through the App Store to see kind of what is trending towards the top, and you see apps like Truebill or Albert. You see other tax-related apps like TurboTax, but maybe that's just slightly more complex and at least behind the scenes, and much more dynamic in terms of not as streamlined for an initial product. And then one interesting kind of app I saw, and not an app, but seeing Schwab at number 47 overall in the finance category. And again, I'm in there looking for innovative apps, and you see how low a traditional broker is relative to, let's say, Robinhood. So this is the financial category, and Cash App is number one, Robinhood is number two at the moment, and you have PayPal and some others, Chime, and again, and then you see more of the traditional old school vendors in a sense at number 47 overall in the finance category. And I just thought it was an eye opener in terms of potentially how far behind they are in terms of having that direct relationship with their customers. But again, stepping back and thinking of directionally where Cash App could be headed is budgeting, and then going beyond that years down the road as they open up the platform. One thing for them, at least from an experience standpoint, is just ensuring that there is some sort of ease of use, because obviously the more products you put within an app, the more real estate or less real estate you then therefore have. And there is this fine line between that. But given that they've had the experience in the seller ecosystem of building and expanding their product portfolio from making an initial sale to then adding things like payroll, adding things like marketing and gift cards and loyalty programs, they have experience of obviously building the ecosystem up, which is, again, is the beauty of this model, where Cash App is well behind in terms of its maturity to its seller ecosystem. So they've experienced the curve of development and then adoption, and using that knowledge and information. And the same thing goes with Jack Dorsey, is the CEO of Twitter as well. Again, an app focused a product where they've built that product portfolio as well. So he has experience in terms of understanding the real estate and user interface or UI needs and within an app. I guess stepping away from the Cash App specific on a standalone basis, I know on many occasions Venmo, and trying to look beyond Cash App and looking at the competitors here, is Venmo is often seen as the competitor to Cash App. But I think as time has gone on, at least from my standpoint, and I think you likely agree, is that competition is becoming less and less direct. They're competing clearly for real estate on our devices, and Venmo's seeing app usage and download volumes continue to grow, but I think the emphasis remains single usage. The social interaction happens within the app. Conversely, you look at Cash App, and they've used external social platforms to influence engagement, usage, downloads, and then make the app format itself much more functional for day-to-day use. One stat, at least I like to bring up always, is how Cash App has 1.2 million Instagram followers, and the same dynamic is true on other social platforms. And then if you compare that to, let's say, Venmo, which again is seen as a peer-to-peer, more social platform, it has only 18,000 Instagram followers. So there's this interesting dynamic where Venmo's social presence happens within the app, and Cash App's social presence happens outside of the app. And ultimately, that is driving tons of new users to Cash App because they are allowed to, or they're able to influence externally to then bring them internally into the app, and then give them the use case and functionality to become daily users. So Venmo is, and what I wanted to ask you was, it's one competitor in the space. There's also companies like Chime, Intuit, which just acquired Credit Karma. There's Robinhood. There's other international players and neobanks that we've discussed in the past. But how are some of these international players, in your view, and even some of the others like Robinhood, positioning themselves as this market continues to shake out?
Yeah, I think on the international front, from international challenger banks, or I think you can even say European challenger banks, because that's where they're really coming from. So we're talking about N26 from Germany, Monzo from the UK, Revolut from the UK, which launched yesterday. Yeah, and then
In the US, right?
yeah, yes, yeah, sorry, yeah, exactly. They're coming from the UK, and they Revolut launched in the US yesterday. And those apps, right, those challenger banks, they are launching in the US, where you have, I think, according to one report that came out last year, at least 25 challenger banks, and in those you have Chime and Cash App, which combined control maybe 30 million active users. So the market over here in the US is really, it's really competitive. And as much coming from Germany, as much I would love to see them kind of succeed, I think it's going to be tough. So, for example, N26 launched in US July 2019. In January 2020, they announced that they acquired 250,000 customers in those 6 months that they were live. And the important thing there is that those 250,000 that they announced, those are the registered users. Those are not the active users. Those are users who downloaded the app but might not even use it. So maybe they just downloaded it kind of out of curiosity or something. So it doesn't really give you any kind of or it's not really that accurate in informing how the app is actually doing. And from what you earlier said, Sean, about Cash App, rolling out these massive give out campaigns over recent days, I think it's fair to say that 250,000 users is probably what Cash App acquires on a good Super Cash App Friday. And that's the equivalent to what N26 acquired over 6 months. So I think that just puts things into perspective. On the Revolut, there was a Revolut launch yesterday. I think that Revolut, out of all of the European challenger banks, might be the one with the best chances, because they've just been very aggressive in international rollout. I think they have the highest number of geographies of any challenger bank live globally. So I would expect them to kind of be aggressive in the US as well. And they've actually been able to generate kind of these organic network effects in the in the UK, as they were scaling over there in recent years. But yeah, overall, yeah, the market is very crowded in the US. The European guys, the domestic challenger banks. Then you also have kind of bigger fintechs coming into the picture, like you said, with Intuit and Credit Karma. Also, Lending Club acquired a bank, wants to get into consumer financials, or consumer banking rather. So yeah, it's going to be tough for all of them. I think one interesting thing you also have to keep in mind is kind of the regulation perspective with, like I said, Square receiving the bank charter, and also Varo Money receiving the bank charter. So that might turn out to be a competitive advantage if you don't have to have this partner bank, which is this existing model right now of all the fintechs that you have to partner with a FDIC insured and regulated partner bank in order to offer all those products, right? In some sense, all these fintechs and challenger banks are just the front end of those often small town FDIC insured banks. And now if you have your own banking charter, you can be a little bit more flexible. The unit economics might become better. So maybe that's going to be a competitive advantage and kind of differentiator going forward. And from that perspective, Square now might have this competitive advantage. Maybe Varo Money has it. I think for the European guys, it's going to be very tricky to obtain this, this bank charter. We could go kind of into detail, but from what the FDIC says, I think it doesn't look that good, because basically the new rules around that also include that the parent company has to be FDIC kind of not regulated, but kind of approved. So the FDIC will look heavily into the parent company. And I don't know if an N26 in Germany or Revolut in the UK, wants their finances, wants to hand over their finances to the UK, to the FDIC. So a lot of
Right.
things going on there. I think what it comes down to, from my perspective, is what I've talked about earlier about Cash App's advantage, with their organic peer-to-peer payments network effects, how they're acquiring customers, how they're keeping them engaged, and how they keep them from churning. I think that's a very, very important differentiator in this very crowded space.
For sure. And we just saw, I mean, this week I got that alert that then I shared with you about the Cash App in the UK quickly,
Right.
after their very first kind of marketing trial run, shot up to a number 2 in the UK App Store. And I suspect as time goes on and they continue to perfect their marketing tools, they'll continue to do, likely in some form or fashion, what they've done in the US. And you can't give the Cash App team enough credit on the marketing side to build their audience, and it's showing up in the results in terms of downloads. And at the end of March, it's going to be interesting to see what that download profile looks like. And it's again, March has been not historically, but this year, one of the more difficult months to think about as the world has changed. And if we continue to see something where Cash App's audience downloads, engagement improves in moments like this, I mean, what does that say about the resilience of the platform on a go-forward basis? So it says a lot. So for Cash App, I think we'll end there, and let's talk briefly about the seller ecosystem, and super brief. But I think right now it's just a great time to think about how the seller business is vertically built, given that some of the sellers on Square, they're facing all types of challenges as their brick and mortar retail continues to be shut down, and they're looking for support from different types of vendors. So if you have a piecemeal point of sale solution with your bank on one side and then your payroll provider on another side and other types of software all piecemeal together, I think ultimately that puts you in a different place relative to if you are a merchant on Square where they completely understand your needs. They're seeing your revenue, they're seeing your location and your historical revenue prior to this occasion. They have a loan outstanding potentially on your business that you have to pay back, but they're also understanding that you have cash flow needs. So this month they obviously announced the shutdown or the refund of their March software payments that merchants have to pay them. So they're giving them a little bit of support on the software spend side. They're also halting some of the loan interest payments that they generally collect on a monthly basis or on a transaction basis, and doing so in the best interest of their merchants, which again is very, very different. And at the same time, they're able to create new functionality driven by the business needs of their merchants today. So quickly they rolled out curbside pickup and added that to their software stack this week. And yesterday they announced how they're going to continue to emphasize what sellers need today. And again, when you think back and you look at what a non-verticalized full stack software hardware player would be doing in this environment, and how the merchant would have to kind of go back and forth between banks and software vendors to ask for support. Here you have Square on one side with a pristine balance sheet that, again, they say they can last over 2 years given their cash position and their cash burn. They are best positioned to support their merchants, to keep their merchants alive and well, and then get through this situation on the other side, potentially even stronger, with a stronger relationship with their merchants for the long term. And then when you talk about ROIs, and it goes back to the numbers, it's right, it's the acquisition cost, and then how long you hold that customer, which ultimately will build your potential ROI and the timing of it. So I wanted to get your picture, how you're thinking about seller today, and then also we're obviously in this environment, but the future of that platform, and just getting your brief insights into that.
Yeah, I think it's important to remember from a high level perspective, kind of what Square has done over recent years and what kind of company Square is. I think you put it perfectly at the very beginning of our conversation when you said that Square built up 2 ecosystems from scratch. Square is a company that always has operated in an environment of uncertainty, maybe chaos if you're building completely new products, if you're solving problems that lead to other problems that you have to solve, and so forth. Square has been a newcomer in the payments industry. They're not some kind of legacy provider that is sitting there and has maybe to kind of fend off their market position, but doesn't really have to do much. No, like I said, they're used to this environment, I think, to this uncertainty, and I think that's kind of conceptually for me, very important, and that's why I trust a company like Square in these tough times much more than other companies. And I think that the call yesterday reflected that very well when they talked about, and you just talked about it as well, kind of what they're doing from the merchants, launching curbside pickup, in a matter of days. They put up a video on YouTube that shows kind of step by step for merchants how they can set that up. They talked about this research platform that they're putting out, that they're doing webinar with in between merchants and so forth. So I think that's just great to hear, and really what I expect from a company like Square, how to act in this situation. And going forward, in this, especially in this situation, I think Square's mission always has been to empower small businesses, and small businesses are going to get creative now, and I think Square should be the perfect partner for them to, be creative and somehow survive this. And yeah, so I think from that perspective, they are the kind of company to weather the storm.
For sure. Yeah, no, for seller, one thing I think, at least from a future standpoint, is separating the hardware from the software. I mean, we're seeing Apple do that slightly today, specifically with music and moving that into new ecosystems, or new platforms, operating systems, I meant. Um, you can begin to think about how um, their software can move across different operating systems. So you take a vertical approach, you become specialists in all different components of the stack, and then you separate that out as time goes on, ultimately opening up your opportunity set, specifically as you cross geographies. Um, I think ultimately that is the potential future of it, um, in terms of opening up the seller community. And obviously, recently they sold their caviar business, so they're trying to move out of more unprofitable, less sticky, more competitive parts of the market and truly emphasize the areas in which they believe they have a um, a real value to offer, and important and critical parts of it. So we're seeing a lot of the innovation they're doing when we're analyzing um, different types of either job postings or their patent applications that they're putting out there, both on the hardware side and the software side, whether it's using data inside a restaurant to best configure and analyze where movement inside the restaurant is taking place to reshuffle your tables to have the best flow within. So again, they're taking likely what they do best, um, and optimizing some of those to increase and enhance the value that they're providing to their merchants. Then over time, believing that they'll likely extend that out to new operating models. But again, so I wanted to at least end it shortly and stop there in terms of really digging into both. But from a high level, just if you had uh, a, a clean takeaway for everybody, and then maybe when we get the actual investor day, we can come back and revisit some of those topics and just kind of do it again. But if you just had one takeaway, outside of the three you gave at the beginning, just from the overall Square business, what would it be?
Um, Tricky outside of the three I mentioned before, but I think it's just to see the unit economics of Cash App and how that business is growing, and like you said, how it's generating return. I think that's really great to see, and especially just or generally from a fintech perspective, it's very rare that we get those insights into a consumer financial company, um, that in those sectors. Most of these fintechs, these challenger banks, are private, so we don't see any of those information. So I think it's great to see that what great of a job Cash App is doing, and likely is doing probably better job than many of the private fintechs are, which are valued like crazy. So that's good to see.
Yeah, cool. Well, that is it. And yeah, when the investor day happens, we'll get back on and potentially get on this, and if not, we'll be in touch regardless. So that is it. I appreciate you coming on, spending some time. Hope you stay safe during this moment, and we'll be in touch.
Yes, thank you so much. Stay safe.
Alrighty, bye now.
Bye.